Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thanks very much for listening today, and don't forget to please take some time to like this video and subscribe to my channel so you can get alerted when I do my next videos. So I'm sorry that I haven't produced a video in the last couple of weeks. I'd been away for a period of time, and also last week the notifications were down on eToro, so not many of people would have had the opportunity to watch the video. So I thought I would save it for today. So in today's video, I'm going to be talking about what happened in the markets last week and also talking about how our portfolio fared overall. So last week in the markets, again, it was a very volatile week, as you can imagine, with this Ukraine-Russia conflict that is currently going on. The NASDAQ was down a whopping 3.5% and the S&P500 was down 2.9%, and our portfolio was slightly up overall for the week at 0.8%. The reason why our portfolio outperformed the S&P 500 and also the NASDAQ is that European stocks did quite well overall in our portfolio. Not only did European stocks do quite well, but also our oil and gas related stocks really outperformed. And some of our renewable energy type stocks really performed well as well. So that allowed me to actually be above the main indexes last week, which I'm quite proud of considering how volatile it was. I also conducted many short-term trades last week in order to take advantage of the volatility. As I mentioned in my yearly review, I also do these short-term trades and also hedging techniques, which I use in times of heavy volatility, which really does help our portfolio out overall. So I would continue to do that, but it's only with a small part of our portfolio, and I make sure that I do not take too many risks for my copiers. So what happened in the US markets last week? And I will start off with the global weekly market update. Last week, as I mentioned, US stocks were majority down last week, except for those in the oil sector and a few other key sectors. So the reason why the markets were down last week is there was continual conflict in Russia and Ukraine. It was another week of a lot of bombings and a lot of civilian casualties in Ukraine, which is very sad, and my heart goes out to all of Ukrainians. Earlier on in the week, the NASDAQ fell to over 23% from its overall all-time highs. This puts it slightly into bear territory, but it has since recovered slightly from that point. However, the S&P 500 is down about 14% from its all-time highs, so that is still in correction territory. And there was last week lots of discussions between Russia and Ukraine. So Ukraine and Russia have held many different meetings in Belarus to try to come to some type of resolution. There is reports from both negotiators that they are making progress, and they hope to be able to report some progress in the next couple of days. However, it hasn't been stated exactly what the discussions have entailed and what type of resolutions they are looking to come to. So we will see that within the next couple of days. We also saw some very large brands last week in food and beverage in the US who have withdrawn their products from the shelves overall in Russia. So this includes big companies such as Pepsi Cola and also Coca-Cola, as well as many other food and beverage companies. So this did really hurt the consumer staples industry last week, and we saw some fall in those shares as they have withdrawn from the Russian market. Earlier on in the week, on Monday, it was rumored that the US were going to place an oil embargo on Russia, and they were going to try and get the oil from elsewhere, such as Iran and also from Venezuela. This caused the oil price to spike up to $136, which was a 14-year high. And on Tuesday, however, it was actually announced that the US were going to place that oil embargo on Russia. However, there were other countries such as the UAE, which said they could significantly increase the output in order to satisfy demand. However, a little bit later, it was then announced by the UAE that they were going to keep to the OPEC quota. However, this did cause the oil price to go down a bit to levels just over $100 towards the end of the week. However, it's very clear that there is a big supply squeeze, and with Russia being the second largest country to export oil, it is clear that as demand goes up for oil, that they're going to have to look elsewhere to get as much oil as possible to be able to satisfy demand, or alternatively look at alternate renewable energy sources in order to satisfy that demand. We also saw some other big rises in commodity costs as they continue to rise. And one of those was nickel. And nickel rose significantly last week, and it actually caused them to actually close the market for a while, and it's actually still closed. And Russia is obviously one of the largest producers of nickel, so it's unclear what the price trajectory is going to be in the future for nickel, and it's quite clear that we need to get it from elsewhere. The other commodity which we saw some rises over the last couple of weeks was wheat, and that is again because Russia and Ukraine are a key supplier of wheat. However, later on in the week, last week, it was actually announced that the world supply of wheat was more significant than had been expected, and this caused a drop off in the wheat price. And this is a large reason why I do have a short position in wheat. And although wheat price has been going up a lot recently, the wheat price is at sky high prices at the moment, and I do expect that wheat price to go down, albeit still to quite a high level historically. Another key piece of news that came last week was the inflation readings, and this caused quite a lot of ripples in the market because the inflation reading was at about 7.9 CPI, and this is the highest inflation reading since January 1982, and this saw a month-on-month increase of 0.8%, and it's very clear that inflation is continuing to rise. One important thing to note as well is this is for the period slightly before the Ukraine-Russia conflict. So in my opinion, in the next couple of months, it's likely that the inflation figure will rise quite significantly before we start to see some raising in the interest rates and some other mechanisms from the Fed to be able to reduce these inflation rates to more normal levels. However, 2% target is extremely unlikely in 2022. So I think we're quite likely to have higher inflation rates for longer. However, there is a very strong employment market at the moment, and we saw jobless claims. Although they were slightly higher than expectations, they were still very historically low. We also saw a very high number of open job rates that were available, which shows that there is a lot of demand overall in the market for workers, and the economy is still going very healthily, as we saw from a lot of the earnings reports recently. As we move on to Europe now, and there was a lot of optimism overall in the European markets last week as they rose. And one of the big reasons why the European markets rose last week is there was optimism that the Ukraine-Russia conflict could be solved sooner than expected. And this would be obviously very good overall for the markets, especially in some of those markets that have been hit particularly hard, such as Germany and the UK. In addition to the US, the UK and the EU have also been looking at reducing dependency on Russia for oil and gas. And the UK announced last week that they plan to completely remove themselves from Russian exports in oil by the end of 2022. It must be known that the European community as a whole has a lot more reliance on Russian oil and gas than the US does. So it's important that it transitions more smoothly in order to make sure that customers do not have very excessive oil and gas bills. Also, the EU announced that they plan to reduce the dependency on Russian gas by 2/3 by the end of 2022. However, Germany are being a little bit careful because they do not want to put too much pressure overall on Russia. And this is for a number of different reasons. So one is there's a very important gas pipeline between Russia and Germany, which Putin has threatened to close off if Europe, for example, are involved in the war in any state or form. So they have to be really careful to make sure that they do not really affect the local people in Germany by increased energy bills. Also, UK supermarkets also pulled Russian products off the shelves. And I think this is likely to continue to the end of the Ukraine-Russia conflict. Lastly, the German finance minister announced that Germany were going to pledge $200 billion in terms of sustainability and environmental protection goals. And this includes promoting the use of hydrogen and some other areas, which I think will be very good for our alternative energy stocks, and especially Nel Hydrogen, who are involved in the hydrogen industry. As we move on to China now, and last week the Chinese markets were generally down, and this is because there was a lot of pressure overall on China for a number of different reasons. So number one, they had a lot of issues. Obviously they are on the periphery and kind of involved in the Russia-Ukraine conflict, as China is quite a key supporter of Russia, especially when they have this turmoil also going on in Taiwan, and they do not want the US to get involved, for example. So this has put a little bit of pressure overall on the market. The second point is that there has been an increase again of COVID cases in China, and China has a very strict policy around COVID. So this does put restrictions overall on the economy. And thirdly, the price of commodities and raw materials are continuing to increase, and this has caused increases overall in the PPI inflation rate. However, there was some positive news, because overall, over the last few months, I've been talking about the issues with regard to Chinese companies listing in the US. And there's a lot of talk about Chinese companies not reaching the audit requirements that are required for companies to list in the US. However, there is ongoing talk between the US and China about some resolutions that they can come to, because the Chinese are very worried about data being released from China, which affects national security. And the US is very worried about compliance with their overall regulations and clarity for the overall investor. So the talks are going quite well, and they expect to have a resolution over the next few days. Last week marked the annual National People's Congress, in which China outlined that they plan to grow their GDP by 5.5% this year. And this got a lot of analysts thinking that this could mean that they are going to continue with more stimulus overall in the Chinese economy, and also maybe pull back some of those layers of regulations that they have put in place over the last couple of months, or at least be more regulatory friendly. So we will see how that goes, but it's seen as quite an ambitious target overall in GDP growth. Lastly, on China, as I mentioned, the PPI inflation has got very high in China over the last couple of months. And that is mainly because the price of commodities and raw materials have increased significantly. And China is one of the biggest manufacturers overall in the world. And PPI actually increased to 8.9%, which was actually above consensus expectations. However, the PPI figure was a lot better, and that was at about 1.9%, which was mostly in line with consensus. As we move on to the top 3 performing stocks of last week, and the top performing stock last week, unsurprisingly, was Nel Hydrogen, which is a Norwegian based stock that deals in hydrogen power. And this did very well last week and was actually up over 33% for the week. And this is because there is more of a demand for hydrogen power. And we also saw that announcement by Germany that they were going to invest a huge amount of money in hydrogen power generation. So this was very good overall for that stock. The second best performing stock for last week was Copiers Pharmaceuticals, and that was up 8.3% for last week. Third best performing stock in our portfolio last week was Flowserve, which was up about 11.3% overall for last week. And this is a new stock overall in our portfolio. And please take the time to read my analysis on Flowserve. And I think that they are going to really benefit from an increase overall in the oil price. And often there is a lag because the capex spending and the budgets come later as oil prices rise. And I'm expecting Flowserve to rise quite significantly throughout 2022. As we move on to crypto now, and last week the crypto markets were generally quite flat, especially Bitcoin, as it's been quite stagnant and around that $39,000 mark. And we've seen a key accumulation range between 36,000 to 42,000 over the last couple of months. And it's very important that we see kind of a breakout with volume in order for us to be able to get above that $42,000 mark and create some momentum. However, it actually has held up pretty well considering the global macroeconomic climate, especially with what's happening in Ukraine and Russia, and also the fears around increased interest rates. So I do expect that it's still going to have a very good 2022. However, we will need to be patient. There was also a lot of anxiety last week around the crypto bill that is being put in place by President Biden. And there was actually some quotes leaked last week from Janet Yellen. And it was actually much more positive than had been expected, because there had been a lot of fears in the market that they might go a bit heavy-handed overall with regulations. However, one of the key comments from Janet Yellen was that they expected digital assets to be extremely important for the future of the nation of the US. So this is positive signs that they do not want to be too heavy-handed overall in their regulations, and they want to be more crypto friendly. However, the SEC did reject another Bitcoin spot ETF, which was not unexpected from the New York Digital Assets Group. We've seen a number of these being rejected over the last couple of months, and it's not expected that one will be approved in the near future. However, in the long term, as these regulations start to be rolled out and the US start to feel like they have a bit more control over the overall crypto ecosystem, then I think that it's quite likely that a spot Bitcoin ETF will be approved like it has been in other countries. So this wasn't really seen as big news overall in the market because it wasn't the first one to be rejected. We also saw Hedera Hashgraph announce a $100 million fund in order to promote future sustainability overall for the HBAR protocol. Lastly, Yuga Labs, who own the Bored Yacht Ape Club NFT collection, has bought the historic CryptoPunks NFT collection on the Ethereum network. And they have invested a significant amount in this in order to be able to expand their reach in the NFT world. Thanks very much for listening to my video today. I know that the portfolio has been down in 2022 overall as a whole, but it's important to know that the whole market has been down for a number of different reasons this year in 2022, such as this Russia-Ukraine conflict and also those fears around interest rates and really high inflation. We are in unprecedented times at the moment, and that has caused the portfolio to drop. However, we are still doing well in comparison to the NASDAQ 100, and also not very far off the SP500, as well as Bitcoin and some other benchmarks that I look at when comparing my portfolio. I'm very confident in the future growth of our portfolio and our strategy overall in 2022. And although times may seem quite grim at the moment in the markets, it will just take some good news in order for the overall markets to move upwards again. And we have generally historically seen the stock market rising again after these different conflicts that have happened around the world, and I don't expect this one to be any different. So I think important point is to stay patient overall with our portfolio, and I think in the long run you will be very well rewarded. Also, please don't forget to join my Discord group. We have a really passionate community of bees in there, and we talk about a variety of different investment topics, and we have a lot of fun. So please see the invitation below and please join that group. Have a great week ahead and look after yourself.